All right. The event has officially started. We're already at 200 people. Nice. Hello, welcome everybody that is jumping on right as we start. We are so happy to be here. Just going to test this out as people come in. So, hello. While you guys are coming in, you can look on the screen and see that this is totally live and you guys are able to chat to us and talk to us as we're going. So I can see you guys saying hello to each other. Awesome. I can see Lisa, Brian, Kimberly, Ashley, oh, hey, Tracy. I know a lot of these names. Allison, Brandon.
Wow. Yeah. We have lift.
Hey, everyone.
Somebody said we have lift off.
We have lift off. Okay, so some people are saying frozen. So for those of you who are saying that, this is a webinar. It's live. It's on Wi-Fi. Me and Joseph have tested our Wi-Fi and it seems to be rocking on our end. So the first thing to do if you see something frozen is refresh your screen because it could potentially be yours. But we'll be watching the chat. So if it does pop up that there is tons of frozen people, we'll check in on our end and see what's going on. So say a big ol' yes if you can hear me okay and it sounds very clear. Oh, Patricia, thank you for telling me. And Joseph, will you talk for a second so everyone can hear you and make sure they hear you great?
Yeah, everybody can hear me okay. Also type in yes or somebody let us know. Yeah, all those yes people out there. That's exactly what we need.
All the yes people. We love the yes people. Look at them. I love it. That's like flying. We've got 246 people in here already. This is really exciting.
That's exactly the kind of people we need to hire. Yes people.
Yes people. That's what we need. Okay, so we're going to start it out by having some fun with a poll because I'm curious of who all is in here. So hopefully you can see this. Pop in there. We invited tons of great people. We have recruiters and companies in here who's just as curious. What the heck's going on with the new tax laws? How is it going to impact us? We're really happy you're here. We got travelers that are out there doing it, living the dream and want to know, what is 2018 going to look like? How is this going to impact me? And then we've got you dreamers who I love because you're planners way more than I was when I first started coming to these webinars, being empowered and learning. So, and we got other. So if you're other, type into the chat. I want to know what other means. But look at that. Mostly travelers that are out there already traveling. That's great. All right. Okay, so I'm going to go back into the chat. Sounds like we're good to go. And yeah, our videos are small, but we can change that. Now you can probably see us bigger. Okay, so we're going to do something a little bit fun to start out today. A lot of you guys in here might know me. A lot of you guys might know Joseph. Maybe some of you guys are meeting us both for the first time. But Joseph Smith, he is the founder of Travel Tax. And I'll let you introduce yourself a little bit too. He's kind of like in our industry of traveling healthcare, the guy that we really look up to as the gold standard. He spent so many years dedicated to us as travelers and the companies, teaching us best practice out there, teaching us what is a tax home and how to keep us safe. So we appreciate him so very much. I'm going to do a little bit of get to know you with Joseph at the beginning, just some fast and fun questions. To get to know him outside of tax, because he's way more than tax. He's one of my good friends. And so I'm going to let you guys in on a little bit of Joseph. But do you want to say anything to everyone about travel tax in general before he doesn't even know the questions that are coming. So before I put you on the spot with some fun questions.
Well, it all started. Well, let's see if I can share this with you. It all started way back 20 plus years ago when I had my license plate during my travel years. Way back when I traveled in the early 90s, I started dating myself here now, you know. But no, when I finished college, I was a double major in respiratory therapy and accounting. And my wife and I got married, hit the road, traveled. And the next thing you know, I was doing tax returns for my coworkers. Yeah, I'll go do a treatment for you if you can go figure this out for me. Nice little bargaining tool there, you know. Here, take my pager. but that's how it all got started, sort of a humble beginnings. And that was 1991. Yeah. Was that like 26, 27 years there? So we've been pretty immersed in the tax issues of the industry. And of course, it grew into other things too, the Travelers Conference, which, Laura, you're a part of as well. I used to travel around the nation and do these little tax seminars. And then somebody said, oh, let's have a Travelers Conference. So we never thought it would have 1,200 people like it did last September, but that's how it grew. That's enough about me. What are these funny little questions you got?
All right. Well, I was wondering, in the chat, guys, I'm curious, how many of you guys already know Joseph from Travel Tax, and who in here is this the first time hearing of him? I'm really, really curious. All right. So tell me this. What is your favorite road trip song?
Now you notice she looked at me like the Brady Bunch. You know, looking at me. She's in New Hampshire. I'm in Dallas, so maybe I should look that way to make it all look real.
What is your favorite road trip song?
My favorite road song. I'm a Rush fan, the rock group. And the favorite road song would probably be their song Red Barchetta. Yeah, if you've never heard of it, it's a pretty cool song.
Never heard of it. Very cool. Okay, favorite dessert?
Favorite dessert? Carrot cake with all that gooey icing.
Awesome. Okay, if you could be one age for your whole entire life, what age would you pick?
Oh, please. Probably 40.
40. All right, right on.
Unfortunately, you're not there yet.
Not yet. See, good stuff to come. What is your favorite thing about Dinah?
Probably intelligence.
Which is his wonderful wife, for those of you who don't know that.
Yeah, my wife. Probably being able to just banter and solve problems. We both were problem solvers, and that's sort of how we met. We were going around solving dilemmas and problems, and that's always what's kept us close. Oh, put our brains together and solve another issue. Not the world's problems, everybody else's problems, maybe.
I love it. Okay, last question. Where would be your dream place to travel to if you could go anywhere tomorrow, book a ticket? Where would you go?
Anywhere. I have a bucket list, but if I had to pick one of those places out of the middle of nowhere, it's going to be a tie between New Zealand and going up to Churchill, Manitoba, and walking along the shore of the Hudson Bay with the polar bears, and that long train trip that takes like 3 days to get you through the tundra.
Nice.
Yeah.
I love how specific that is. I feel like that one's going to happen. When you're that specific on a dream, it's going to happen. I like the people in the chat that are answering the questions too. It's fun. Lori, this is your first time listening to both of us. Nice to meet you, Lori. I love hearing y'all's answers. Okay, so for those of you who, thank you, Joseph, that was fun. I learned some new things about you too. That was cool. So for those of you who don't know me at all, which I'm curious about that too, who in here has not heard of me and this is the first time versus who knows who I am? So I am more on the traveler side. More recently, I traveled for 8 years, all over the States, even lived in Australia for a while. And now I run the Empowered Traveler Show. It's a new show on YouTube I just launched, which has been really fun. And I also run Nomadicare, which you can kind of see that my new banner came in this week. It's not wrinkled like my other one got wrinkled at Travelers Conference. I'm part of, I tried to iron the other one. I destroyed it. I had to buy a new one. And then, some of you guys are saying you saw me at Travelers Conference. So if you're at Travelers Conference, you've probably seen both of us. Joseph has been a part of Travelers Conference for how long now? I'm
one of the co-founders.
Co-founders, yeah.
There from the beginning.
10 years. And I'll even put, in case you guys don't know what the Travelers Conference is, I'm going to put that in the chat, or maybe one of you guys can put it in the chat.
Travelersconference.com.
Can you put that in the chat, Joseph? So you guys know of it, but yeah. So I run Nomadicare. I help on the volunteer committee for Travelers Conference. Nomadicare to me is two things. The whole mission of it is to help this industry become more of a win-win industry. So I'm really passionate about putting very good research information out there. So you can follow me on YouTube, on Facebook to learn from me about the industry. And then the other side of that is nomadicare.com, the website, is a place you can go to get a recruiter that I have vetted. And so what does it mean when I vet them is that means these recruiters have gone through over 2 hours of interviewing with me and have to pass this test that says, yes, they play by these win-win rules, which means they don't blind submit. They don't do these red flags. They'll give you the full pay package broken down clearly before they submit you. They stay in touch. They hustle, all of these different things that they have to pass in order to make it on my list. So you can fill out a form on Nomadicare and actually get matched with 2 of these recruiters. And what's cool for this year, the next part of it that we're rolling out that I've always wanted to do, but now I have more time to, is you can write in what benefits you're looking for. So if you know you need day 1 medical benefits, we have a whole wall now with our recruiters on it. So we can match with the benefits you need and the locations you're going to, because we have a list of all their their exclusive contracts too. So please feel free to use that for your recruiters. It is free for the travelers, and the recruiters on there are just doing great things in the industry. So I love matching people with that. So that's who I am. And I think with all of that, thank you guys for all of the sweet words in the chat. But maybe we should start talking about what people came here for, huh? You think they want to hear about taxes, or maybe we should just talk about ourselves for an hour? Right. I don't know. What do you? Oh, and I got my new mugs in this week for Nomadicare. Be brave, be kind, live your dreams. In my world, it's not backwards. All right. So, are you ready?
Obviously,
to do this?
Nothing in it because it didn't spill. So.
No, I do. I actually do. Can you guys guess what's in this? For those of you who know me. Yeah. All right. So what do you say? Should we dive in? Are you ready? So we're going to be talking about taxes today. And most importantly, we're going to be talking about the new tax reform law and how that impacts us as travelers, which it does actually impact us a lot. And yes, you guys are right. You guys do know me. Coffee, coffee, coffee all day long. Ashley, you even said latte. That's what I wish it was. It's just coffee tonight. So yeah, how does it impact us? What can we do? What could it potentially do to our pay? What can we expect from our companies? So many great things we're going to cover. I'm really excited about it because it's brand new information. So, all right. So to start out, we're going to start with the big highlights, the big rumors, the big questions around it, and make sure we're very clear on what this is. And then we're going to go deeper into what are the companies doing, what can we expect for our pay. So the first thing let's talk about, there is a rumor that was going around Facebook for a while, and I think it was mixing up wording, and people were thinking that this new tax law was taking away our stipends. And before we even answer that, I want to make sure we're all on the same page and really clear about what is a stipend versus what is a deduction. So can you just break those two things down for us?
Yeah. Well, when you get the per diems, those are a form of reimbursements, and sometimes they are called stipends, allowances, subsidies, things like that. They are tax-free reimbursements, particularly for lodging, meals, and transportation. And as you said, there was this rumor, even around the Pixis station, that those things were gone. They are not. What is gone is the other term that can often be confused, and that is the deductions. We no longer, as of January 1st of this year, it's not affecting the return we're filing for now. It's affecting the one we're going to file for in 2019. We no longer can deduct any employment expenses. Meals in excess of meal reimbursements, mileage, transportation, uniforms, licenses, CEUs, it's all gone.
Okay. Okay, so, and you guys are welcome to chat. We're going to do Q&A at the very end, but feel free to write stuff. And I think you can mark yourself as a question next to you. So if it is a question you want me to scroll through later and find, make sure you mark it, because it might get lost with almost 300 of you guys on here. So great. That makes a lot of sense to me. So let's make sure this is really clear. The stipends, per diems, that non-tax money that we get as a reimbursement when we're traveling, is that taken away? Is that going to be taxed or not?
No. Stipends have not been touched. Per diems not touched. None of that stuff is touched. It's just the ability to deduct extra that we were not reimbursed for.
Okay, perfect. And I know you said some of them, but let's just slow it down just a little bit. So deductions are no longer, we're no longer able to write them off on our taxes. So let's give that kind of list of the biggest deductions that we have as travelers. I know you said some of them, but we'll just do it one more time. So I know there's CUs, license.
Yeah, for travelers, probably the largest one is mileage. The mileage getting to the assignment that was more than the reimbursement, and the mileage while you were at the assignment, conducting business, fulfilling your contract, back and forth to the hospital or facility. Then you have the meals in excess of what you were given for meal allowances. Then you get into all those other miscellaneous things. Shipping. A lot of people would ship their car. The flight minus the reimbursement. The licenses, the fingerprints for those licenses. There's transcripts for the licenses. That little trip out to California to walk through the office and get your license soon instead of later, that's all out. And then all of what did I say? Licenses, CEUs, references, seminars, investment advisory fees. It's all gone.
Okay.
Until it's all gone till 2026 when I turn 60 years old. How about that one?
All right. We'll celebrate on your birthday for that one. Yeah. Okay. So that was very clear to me. And I think one thing you said that made it really clear to me too, and a write-up I saw of you, which everybody, thank you for coming live. And we are happy that you're here, and we do have something we're going to give you after we answer all these questions for you to take. So you're going to get this in a written form, and you're going to get a free gift from each of us. So those are ready for you at the end. So know that a lot of this will be in writing for you guys too. But one thing you wrote was that, let's say a company gave us $400 to travel, and in the past we could keep that mileage, and maybe the trip cost us $1,000. That difference at $600 is no longer deductible. Correct. Even though the $400 was. Okay. All right. Okay. Sounds good. So some people were saying, all right, fair enough. We're not getting this stuff, but our standard deduction went up. Can you talk about the standard deduction going up? And does that really offset it to make it not a big deal, or is it still quite a difference?
The standard deduction, for the most part, almost doubled. In 2016, the standard deduction was $6,300, and now it's $12,000. But there's a little bit of math there that's tricky. It used to be that we also got the personal exemption. And let me go ahead and do a little screen share here so we can see, and let me make sure I got the right one up before starting. There we go. If you look at the top of this chart, you should be able to see a chart right there where it says without itemized deductions.
I can see it.
If you notice on the first column where it says old 2016, what we would have is a standard deduction based on, again, 16 rules of $6,300, and then we would also get a personal exemption of $4,050. The sort of I don't want to say gimmick, but the trick to the math is here, you don't get the personal exemption anymore. So even though the standard deduction has doubled, the only real gain you get out of this initially is an additional $6,650 of deductions. So if you're not an itemizer and don't have any additional deductions, and it's not just business expenses, it's charity, medical, state and local taxes and that kind of a thing. But if you're not an itemizer, you're going to see, roughly $350 to $400 improvement in your tax situation with this. But this doesn't apply to everybody, obviously. But by taking the personal exemption out, it sort of reduces the benefit of the standard deduction, because it's only a small improvement. It's not the big improvement that's saying that our standard deduction doubled. So there's a little misleading there in the math.
Yeah, thanks for bringing that up. It's nice to see it visually like that, to see how it really isn't that much of a difference. There are some things I want to address just to make it clear as we're going. So I'm not going to answer every question as we go. But the thing is, yes, the reimbursements we get from the companies stay the exact same. I know some of you guys are wanting clarification on that. Those aren't going away. They're not going to be taxed, just like always. So that pay, how we're used to getting paid, is going to be same/similar. We'll talk about how it might change later, but those are not taxed. So just to make sure you understand that. But you guys that are asking questions about, we can't write off expenses to go to Travelers Conference this year and things like that, that's what they're taking away. These work-related things that we used to write off, our scrubs and stuff like that. So that's what we're talking about.
Right.
So just to make sure, I saw a lot of questions around that. So just so you guys are with us. Okay, perfect. So let's talk about, now there's a standard deduction. And it seems like there's different categories of travelers that this might affect more than others. Do you want to talk about the travelers that this is going to probably affect the most, where they might feel it the most in having less deductions?
Right. Well, there's two types of contracts that tend to suffer here. For those doing the seasonal assignments at some of these facilities in the South, like Florida, Arizona, and California, typically those facilities would pay a travel allowance and provide the housing. The difference with that is that it was treated as taxable income. You didn't get, you really, for the most part, they don't provide tax-free reimbursements. They just gross up your wages at a higher amount. You still pay the Social Security, FICA, and the state and federal income taxes on that. So those individuals that used to work those assignments, or do work those assignments, in just 1 3-month period, when you add up the housing that they're paying for, the meal deductions, the travel expenses, in 3 months' time, they could amass $6,000 to $8,000 of employee business expenses. It's all gone. So those are the type of assignments that are that can get hit pretty hard. Then, if you back off from that, you have some types of contracts where you are, and most of these are like those "we want you there yesterday" kind of assignments, crisis shifts. They provide the housing because they want you there and get you busy, and they give you a small amount of travel. Those kind of travelers were able to deduct the meals, deduct the excess travel expenses, and in 1 3-month period, maybe accumulate $4,000 or $5,000 in deductions. It's all gone. But the ones who really stand to hurt the most, and I'm going to throw up another screen share here to be able to illustrate it, is travelers who own their own homes. Here's another chart sort of showing that. Let's say you are a homeowner and your mortgage interest each year is about $6,000. You pay $2,000 in real estate taxes. You may have state taxes or local income taxes of $2,000, and all your travel, you're generating about $5,000 of employee business expenses. Under the old rules, you would add up all of these itemized deductions, and because they exceeded the $6,300 up here, you were able to take the higher amount and then add the personal exemption. So based on these numbers, this individual would have $19,050 of itemized deductions. Under the new law, you have that $6,000 in mortgage interest, $2,000 in real estate taxes, $2,000 in state income taxes, but you don't get to deduct any of the business expenses. And because that total is only $10,000, you're stuck with the $12,000 standard deduction. and then you don't get your personal exemption. So instead of deducting $19,050, you're only deducting $12,000. And that right there is, I guess I don't want to call it a penalty or anything like that, but you're going to wind up with a $1,500+ tax bill that's more than what you would have received under the old laws.
Okay. So that's really good for everyone to hear. It's nice to hear like a number of somewhere, even though every one of our situations is different. Like $1,500 could be how much a difference our pay could be with this new tax law in that situation. But is that right? That could be something like that we could be losing out on with this. Is that right?
Especially the homeowner. Yeah.
Yeah. And if you want to really, if you want to acknowledge these questions that pop up, just so they're wondering if it's state or federal that you're talking about. And I think that's good for you to say straight away so they're not wondering the whole time.
Yeah, this is federal. Now, the one mystery downstream is most states feed off the federal return. They start with either adjusted gross income, taxable income. There's some number on that federal return that they start with. Now, because this law was passed almost in Christmas, the states have not had time to retool everything. That is a big mystery of what they're going to do, because some of the states on their own, without even trying to feed from the federal return, allow employment expenses or a full itemized deduction regimen. We don't know what they're going to do because they've got to see how this impacts their bottom line. So as we go through this year, we're going to see some states tinkering with their tax returns. But yes, this is federal, but states typically sort of follow through on this so that it's not so confusing on their own citizens. They just follow the federal rules, and then makes the state tax returns that much easier.
Okay, all right. So we'll keep moving through these questions. So I know for those of you who do know Joseph Smith, who have seen him at Travelers Conference or whatever it is, he teaches us so well about what is a tax home. And for those of you who don't know about tax homes, we're not going to cover this on this webinar, but just know those are the rules we have to be following in order to get these reimbursements in the first place. So you can go to traveltax.com. He has a brilliant frequently asked question page that answers tons of these questions. So if me saying this makes you think like, I don't know what you're talking about, go there. It's a great resource. But that being said, talking about tax homes, how will this affect the rules that we have in maintaining and keeping a tax home in order to even qualify for these tax-free reimbursements?
It does not change those rules. And there were some of those rumors floating around. Now that we can't deduct it, what's the point of keeping a tax residence? Well, in order for you to receive the housing and meals and all that tax-free, you still have to have a qualifying tax residence. And we're going to talk a little later about some of the other weird possible changes in the IRS reporting coming up, but that doesn't change.
Okay, perfect. And in order for us to justify having tax-free reimbursements, I know there's things that we still need to keep records of. So you just want to give a quick list of what are the things we still need to be keeping a record of to stay safe in our tax returns.
Right. In the past, all your record keeping was geared towards deductions. Now it's more geared towards preservation. If you happen to be chosen for an audit under the new rules, you're going to have to justify that housing allowance. So keep your lease agreements or receipts for lodging that you had. Meals, keep those contracts to show you had to be away from home to justify your meal allowances. And I would still keep a mileage log. You may see some, and two reasons. One, to support your mileage reimbursements, but number two, you may see some agencies starting to ask for that more in the future. So it's good just to keep that practice going. But all that other stuff, it's gone.
Okay, fun. Love it. All right, so this is great, Jennifer. You asked pass-through ? We're going to talk about that now. First of all, do you mind, we're going to talk about pass-through rates and so there's this thing called pass-through rates for independent contractors. Well, you just let everyone know what a pass-through rate is in the first place, so we're on the same page about that.
Well, it'd probably be good to make sure everybody knows what an independent contractor is, because when we're traveling, we're doing employment contracts, but that's not the same thing as being an independent contractor. An independent contractor is somebody who is self-employed, runs their own business, but employs themselves or hires themselves. They do not have any taxes taken out. All the payments that are given to them are just gross payments that they then have to compute their own taxes and make those estimates on. They're really a little mini business is what they are. Now, going over to the pass-through, because this plays into that, one of the interesting things about the tax reform is that the corporate rate has dropped to 21%. And we'll say something about that in a second. But not only...
what was it? I think that's really interesting. What was it that it dropped from?
40. The United States had the second highest corporate tax rate in the world. The only one with the higher one was the United Arab Emirates. Between our state and federal taxes, the corporate rate was 40%.
This is why 20% drop that they didn't. That corporations, which is our recruitment companies, right?
We are now under we're under the halfway point globally now.
Okay, and so this is kind of like teeing us up for later. So keep that in mind. There's more money now because there's less taxes that the corporations are paying. Okay, continue.
Right. Yeah. Now that rate has dropped, and it's needed to be. This is why Burger King was Canadian. They restructured to be a Canadian corporation, and Medtronic was an Irish corporation now because they had lower tax rates. But the corporate tax rate didn't just stop with corporations. It has now trickled its way under tax reform into anybody who's part of an LLC, partnership, S Corp, and just your lowly independent contractor, your self-employed carpenter, your Uber drivers. When I came down here to Dallas, I had 3 Uber drivers in a matter of, I did 3 Uber trips, and I said, oh, by the way, your tax rates are going down. And they were like, really? Yeah. All independent contractors are now going to be able to deduct 20% of their net income before they compute their taxes on it. So, for example, if you work as an independent contractor, after your expenses, you make $50,000. You're going to pay Social Security, Medicare on $50,000, but then you're going to deduct 20% of that, which is $10,000. Before you compute your income tax. So you're only going to have income tax on $40,000 of that $50,000. That's huge. And especially in the gig economy that we have here. And, a lot of millennials are doing gigs. Just like a gig is, I had somebody ask me, what's a gig? Well, the DJ, they'll tell you, I'm going to my gig. Healthcare travelers, that's really what we do. What's your next gig? Well, I go to Washington for 3 months. It really plays into the current way of working because a lot of people doing independent contracting, especially the IT professionals and everything, and it may very well usher in a new wave of interest in working as an independent contractor. We still have some of the barriers to doing that, though. But there are a small amount, very few agencies that have actually passed the muster of the Department of Labor and IRS to allow that. But it also doesn't preclude somebody from forming an LLC and trying to contract themselves out. I'm not saying it's easy to do. It is not. But now you have the rationale. You have the motivation now because. Because you can still deduct all that stuff that's gone as an independent contractor. You still deduct your meals and all that because you're a business now. That's different from being an employee.
Yeah. Yep. That makes complete sense. So as an independent contractor, we can make more money. We could still deduct a lot more. And then there's the other side of it. If it's a lot more paperwork and legality to start your own LLC, there's so much to learn about that. But maybe, you know, if this tax law stays for a long time, maybe we'll see a lot more healthcare professionals figuring out how to do this, because there is a money payoff, it sounds like, for independent contractors.
Locums, physicians, nurse practitioners, most of them are 1099s anyway, independent contractors. So
Yep. Okay, so let's move back into this corporate tax rate. So our recruitment companies were getting taxed at even up to 40%. It's been dropped to 21%. That's a huge amount of money now. To like, what's going to happen to this extra money that was going to the government and now is for ... So I'd love to hear what that could, we don't know exactly what will happen, but what could that mean for us as travelers with the agencies that are hiring us now having way less taxes to pay?
Yeah, and that 40% included state. So just to get our make sure our numbers are straight.
Good. Okay.
21%, then add the state, we're roughly at 25% now. But still, same question. That's a 15% drop. And you know, not every agency is structured the same way. But the one thing that we really have to be careful with, you can't just say, "Wow, you got a big tax break, so where's my money?" That may happen, but at the same time, the clients of the agencies, who are they? They're nonprofits. They don't get really any benefit out of all this from a larger perspective. Are they going to now drop bill rates, knowing that the agency's bottom line is not going to hurt now that their taxes are less? That is a big mystery. I know a few agencies, larger agencies, that are really concerned about that on a big scale. So how that plays out, it's going to be an interesting year.
So it sounds like we have this agency in the middle that now has more money than they did, and there's two people looking at them like, who's going to really benefit? The hospital client side is thinking, oh, we can drop our bill rates and we might have the same pay, or we're thinking maybe you could raise our pay, give us more money. So we have, like, time will tell what will happen. Okay, that makes sense to me.
And you think about it, if you're working full time in a hospital, you're not going to see an increase because of the tax change, other than your personal tax rate, because your hospital is a nonprofit. They don't benefit from this for those purposes.
Yeah, interesting. We have a hey Adam, what's up? So Adam's from a company. Well, I'm gonna see what he has to say from a company perspective. So thanks for asking a question. He wanted to say, please keep in mind that many healthcare staffing companies are S corporations, not C corporations. S corporations in California and other high tax states will likely actually pay more taxes because S corps can no longer deduct state and from federal taxes. Do you have anything to say to that? That's your world. That's your world.
Businesses can still deduct taxes. It's the individuals that are going to be limited to $10,000 of combined state and local taxes regardless of source. So this is why they are talking about the California homeowner. The New York homeowner stands to hurt from this as well too, because when they add up their income taxes and real estate taxes on the state and local level, those oftentimes for a typical household are more like 12, 15,000. Now they can only do 10 of it.
Yeah. So addressing this, it sounds like maybe misconceptions, S corp, C corp, the taxes will affect those the same for what you were talking about.
And that's why I qualified all this, because every agency has its own structure. Sure. And even as an S corp, the owners, unless their income is too high, they're going to benefit from this new pass-through rate. But that money sort of, without getting in too much detail, sort of goes to the shareholders, and they may not be active participants in what goes on in the company. There's no simple A to B principle here.
But Joseph, that's what we're looking for. So if you could just make a simple principle, that would be great.
Yeah. Right. So I don't want to get into too much detail.
Yeah, fair enough. Okay, so here's something we can talk about. More speculation, but I think we could see this happening. So now we cannot deduct anything anymore. So us as travelers, we might be looking for companies to make sure that we're getting the most we can for these stipends they're able to give us. That could be traveling, our license reimbursement. We might even start looking for them more for CEU reimbursements, for scrub reimbursements, anything we can do to get reimbursed, and they can do that and we can't any longer. Now, knowing that, how might the agencies, the companies, start restructuring their pay packages to us potentially because of this?
Right. And I'm going to put up a slide here. And by the way, if you want a detailed analysis on this, you can go to our website. There is a PDF file that you can download from on the very top.
They're going to get a link at the end.
Yeah, there you go. Oh, that's the gift. Yeah.
That's your gift. Yeah.
It was all freshly re-edited today for everybody. Now, that brings up the question. Here I am, a traveler. I've been traveling for a year or two, and I know that I can deduct all this mileage and everything in excess of my reimbursements. Now I do that 2,000-mile drive to my next assignment, and my agency has capped the reimbursement at $300. In the past, what is that? That's about almost, even you throw in hotels, that's about a $1,300 deduction, and I got what, $300?
Mm-hmm.
Why should I even travel anymore? Now, a lot of travelers don't think like that, but a lot do. It's a perception. Now the value of traveling is perceived to be less because I can't deduct these expenses that I used to anymore. So then the mindset is, well, if I can't deduct it, why don't you, agency, reimburse me for it? So there is already a discussion going on amongst some agencies about how to restructure their reimbursements in order for the traveler to perceive like they're being taken care of. Because let's say all you got was housing, meals, and a small travel, but then you had to spend money on the licenses, CEUs, and all that kind of stuff. Now you can't deduct that. And you go, well, can you reimburse me for it? So since a lot of agencies concentrate their reimbursements in housing, you may, this is all speculation, but something's going to give here. They may pull from the housing, pull that over to travel so that they're giving the full standard mileage allowance, and then put some other funds into reimbursements like CEUs, licenses, etc. Now, that sounds good, but I'm going to bring up another slide here. That's a perception in value, and you got to be careful that it's not just all perceived value, but it's also real value or absolute value. So for instance, and this is off a PowerPoint that I've been using for some of my recruiter seminars, let's say you have this contract one, that's a standard 3-month assignment. You're getting $2,000 a month for housing, $1,000 a month for meals, $300 for travel, which is round trip $600. You're getting a total of $9,600. But here's your perception over here. Well, you're giving me $600, but I drove $2,000 one way and $2,000 back home. I drove 4,000 miles and you gave me $600. Here's another perception. Well, I paid for my license, but you didn't give me anything for that. So perception isn't very happy. But then if I restructure my contract, I pull from my housing $500 a month, move that around a little bit. I take down my meals a little bit. Now I'm giving a full travel reimbursement of $1,500 as opposed to the $600 I used to. And I have this extra money left over for licenses, CEUs, uniforms, and maybe rolling into vacation or something else. Here's the thing. It's still only $9,600. The same as up here, but what's the difference? The perception is, well, I had a lot of expenses I didn't get reimbursed for, to, oh, wow, they're taking care of me.
Mm.
And that's why, when you compare contracts to one another, there may be a perception, and I hate using that word all the time, but the perception may be, well, I'm not getting what I should, and then you just reshuffle it. Oh, I am, but you really aren't getting anything more. It's just a shift of the numbers to different categories.
Yeah. Yeah, but people are saying, thank you for the visuals. They are so helpful. So I'm glad you brought those. And Brandon, cue the coffee pot analogy. That's hilarious.
I'm a college teacher. I got to do this stuff.
I love that you're bringing the visuals. It helps so much, and especially with numbers and with taxes. And so I appreciate you bringing those. And I think what you're saying, it makes so much sense to me. It's like a new opportunity for agencies to figure out how to market differently, to be perceived as the better agency. And that's why us as empowered travelers, right? Like what I like to call the travelers, like we get to really ask the questions of how our pay is getting broken down. So we're able to compare that. Because I know when I started traveling 8 years ago, and the very first booth I ever saw at an AOTA conference, and they said free housing, free this. And I really believed it when I got started. Now, those, I don't think many people who are online and informed believe anymore. We understand that's part of our pay. But now there's like a new opportunity for agencies to start using marketing to say different things are free. And it's just remembering it's the same thing. Like exactly, the visual was so great that $500 they take from housing to put somewhere else, it's still just money. And for those of you on here who haven't ever gotten my pay breakdown guide, I'll put it in the chat actually. You can just download it. It's free, but it kind of shows you a way a pay package could be broken down to make sure when agencies are giving you a pay breakdown, you're seeing all the different places your money can go. So it helps you remember it's always one pile of money. It's the same. Does that sound right, Joseph? Yeah.
Yeah. And one person, Mark Gaudet, made a valid point here. The pie is still the pie.
Yeah.
You know,
or I mean, no. For Nomadicare, it's coffee pot, just like Brandon said. That's my analogy. I don't do the pies. I do coffee pot that pours into different coffee mugs. So
yeah, that's a good way to look at it.
Still the coffee pot. But anyway, you guys can download that.
The bill rate's not necessarily going to change unless it drops. But again, that's all part of the mystery here.
That's the mystery, yeah. So good. That was really, really great. Really helpful. Okay, so we're going to do some random things that I think are just good to make sure everyone knows about the tax laws. Really quickly, you can kind of go through these because I think they might be important to some of the people that are listening to this. Does anything change with education for taxes?
Student loan interest still there. American Opportunity Credit still there. Lifetime Learning Credit still there. The one thing that is not there is two of them. Tuition fees deduction. That was generally used for people of higher incomes. And there are a number, at least clients of mine, that were working on their bachelor's degrees, BSNs, and they actually use the employee business expenses deduction to write off all the tuition. It was fantastic for some of my clients. Now that's gone. So if you're working on your BSN, you've got to use one of the two other credits. Now, we do have travelers that have kids. One change that's not even in that paper that I have is that 529 programs, college savings programs, can now be used for private school, high school, middle, elementary school. And especially if you got special needs kids like I do, that's a huge benefit.
Okay, good to know. Healthcare insurance mandate, where we have to pay a penalty if we don't have health insurance. What happens to that?
Gone in 2019, not this year, next year.
Okay, good to know. What about our medical expenses?
That was salvaged, and actually the threshold is not 10% for 2017. That was one of the few retroactive changes. Medical expenses only have to exceed 7.5% of our income to be able to use them this year and 2018.
Great. And then a lot of people are asking questions, and so I'm going to go back to this, even though you did touch on it earlier. People are asking questions about the state, like how does it impact people who live in a no state tax home but work in a state with state taxes, things like that. Do you want to just clarify one more time how we're talking about federal? We're not sure what's going to happen with state, but just reinforce that and maybe talk about that again.
Yeah, well, when you live in one state and work in the other, you are going to pay taxes to both states. Now, obviously, there's some that don't have any, but just for the sake of the illustration, home state's going to tax everything. Work state's going to tax what you make there. Home state gives you a credit for what you pay to the work state. So you're never double taxed. You just pay the higher of the two, and sometimes it's split between two states. These new laws don't affect a state tax system yet. Well, they don't affect it. States are going to respond to this. But that whole scenario with the multi-state filing and everything, that has not changed. You're still going to have to file in every state you work, in the state you live. We're just going to see changes in how states structure their returns.
Perfect. Thank you. Okay, and now we have a list of 10 quick things we're going to say that are the most important takeaways. Like if you were ever to take notes anywhere, you're also going to get the PDF and see this, but these are the things we want to make sure the travelers are taking away as actionable steps. So if you're still with us, jump in the chat, say yes, awesome, can't wait, and we'll go down this list of 10 takeaways. All right.
You're going to read those, or am I going to read them? You
no,
want me to
well, we can switch it off. You can get it. This is your list. You rock it.
I mean, they're in front of me. Now, is this a David Letterman top?
I wanted to see more yeses. Don't you love them? Like scrolling through, you feel like, yeah. Thanks, everybody.
It's a David Letterman top 10 list here. It's
yeah, this is the juice. This is what we all came for. And then after the top 10, you get your we got a big old from
the home office in Sioux City, Iowa, or whatever.
Yeah, and then after this top 10, we'll give you the free gifts and all that, and then we're gonna go back and answer your questions. So big smell to love, guys. So fun. Okay, Joseph, this is your list. I'm gonna let you rock these top 10. We so appreciate you.
So the takeaways here. Number 1, live frugally. This is nothing new. You know, the best way to make money in our industry, especially with housing allowances, is to take the allowance and find something cheaper. Think like a trucker. Eat cheaper. You don't have to go out and spend $80 a day for meals. Most of you don't anyway. But just live frugally. Also, number 2, just because you get a tax deduction doesn't mean spending the money for that tax deduction helps your bottom line. You still have to spend the money to get the tax deduction. Sometimes you're better off spending the money and not worrying about the tax deduction instead. Number 3, since employee business expenses are no longer deductible, this does not justify the agencies with the low ball rates. That is my biggest concern about this, is that now the agencies that are paying these low $10, $12 an hour rates are now going to be living in the limelight because, the IRS isn't looking anymore because then nobody can deduct anything. And that's not the case. The IRS will come up with other ways to track reimbursements, and we may see that pop up on the W-2s where the agencies might be required to report them. It doesn't change the taxability of them. It just changes how they're disclosed.
Gotcha. And I'm going to clarify that just to make sure. I don't know how new or old travelers are on here. What he's talking about with the low ball wages is when you have the pay breakdown, we have our taxable part of the pay breakdown. He's talking about that piece of it, making that piece really, really low to just because they think who knows what's going on. But just to clarify, that's what you mean by that. Is that right?
Right.
Okay. Right on. All right. Keep going.
And I already said number 4, you're going to have some rogue agencies trying to take advantage of this compliance gap. And maybe that deserves some explanation. The IRS has been able to monitor these reimbursement policies because of the employee business expenses. Because if somebody deducted them and the IRS wanted to audit it, they would normally ask for the employment agreement from the agency. They don't have that tool anymore. So what are they going to do? There's a huge compliance issue in reimbursements for people who don't have tax homes and agencies that are not monitoring and vetting them strongly enough. So the IRS is going to come up with something else downstream So that's a takeaway with that. So your tax home is still just as important. Number 5, keep the receipts to justify your reimbursements for 7 years. That's 7 years is very important.
And just to clarify, the receipts you're talking about is for our home, receipts showing that we're paying for home for 7 years for the tax home, right?
Well, more particularly, yes, the tax home, especially if you don't have a mortgage, keep the lease agreements, and of course your assignment location that you're paying for as well too. You want to keep that, keep your contracts, as well as a mileage log to at least justify your travel pay. You do that for preservation, not for deductions, unless you're a contractor. Then number 6, make sure the state returns, like I said, are the same as they were before. And the biggest thing many travelers run into is when they go to a preparer, if they're not used to dealing with every state, those preparers generally will only do 1 or 2 states, their home state and a border state. So it's easy for them to get tripped up when they're trying to do Vermont, California, and Oregon all in one return. But the states are still the most aggressive. The IRS isn't the big problem compared to the states. The states are still cross-referencing your professional licenses to a tax return. The states are still going after people whom they think should be residents and filing as residents. They're all over the board, and they're way more aggressive than the IRS is. And Laura, you already mentioned it. Number 7, see if you can get some additional reimbursements. It never hurts to ask. They can always say no.
Yeah, and I think, sorry, just to add to that, ask for additional reimbursements. If we don't know what's going to happen, if the bill rates are going to drop and our pay stays about the same, but if there is, extra money there to get more reimbursements, not just moving it around, but that's what we want to hopefully that would be the most ideal, I think, for us to get some of that and see our pay actually go up a little bit and get more reimbursements, right?
Yeah. And the last 3, we've sort of already said it, but use your tax savings to pay off some debt. In February, you will see a change in your paychecks because that's when the new withholding tables kick in. It may not be a lot, but per check it can add up. You could see your paycheck increase anywhere from $20 to $50 because the new withholding rates come in. But use that money wisely and pay off debt or invest. Most travelers don't invest.
Yeah, I heard Bitcoin's like really good to invest in, right?
Yeah, Bitcoin, yeah.
All right, and number 10.
Those last 3 were all thrown together.
They're all joined together. Okay, perfect. All right, right on. Joseph, we love it. We appreciate you so much. I'm so grateful he came on to share all this with us. I learned so much today. I'm going to give you guys some free goodies. Thank you. Thanks for sticking with us. And we are going to, right after I give you the goodies right now that should pop up in the chat, we'll start going through and answering some of these questions. All right, so you can tell me, maybe Joseph, since you're the only one that I can hear, tell me how these come up because I'm just going to put them all up at once. So that is for the recruiter matches. So if you are someone who's looking for a recruiter who's been vetted through Nomadicare, so they are going to do the win-win tendencies. We hold them accountable to this. That's the link you can click on to ask for 2 matches with 2 companies that have benefits you need. So did that pop up? Joseph, can you see?
Judy
said it came through. Okay, thanks. I don't think we can see it on our end, so I don't really know what's happening. Okay, cool. So there's that one, and then I think I have to remove that one to put up the next one, which is the PDF. So everyone click on that wants to, and I'm going to take it down to put up the next one. Thanks for all the yeses, guys. What's with that? I love the yeses tonight. All right, and then I'm going to put up, so this next one is going to be the PDF from Travel Tax from Joseph. He wrote all the stuff we talked about up, outlined it beautifully, so you can have that to take, to read over, to reinforce some of this stuff. So let me put that one up.
If you're giving out the actual PDF, I did do some final edits and reloaded a new one.
I think it's just the link to the website.
Okay, good.
Yeah, I think. And
it's traveltax.com if it doesn't show up, and it'll be right in the top part that you can download it from.
Okay, so if it's a PDF, there might have been changes, but yeah, traveltax.com. And we can put that. I'm going to put that in the chat because it's on the main homepage. So traveltax.com, guys. You go to that. It says click here, and that's going to be the most updated PDF that we just went over. You guys will be the first ones to get it because we just put it up today. So you're the first ones to know about it. And then this last thing is something that it's a guidebook that I created that I'm going to give you guys for free, and it's called the Win-Win Playbook. And so it's something I put together that talks about best practices in the industry, so you can read it and understand what are some of the things, for one, you can expect of these great recruiters in general. Whether you use a Nomadicare one or not, it's more about raising the integrity of the whole industry, knowing when recruiters are doing red flags, knowing what to look out for, but also, flip side, knowing how you get to show up as an empowered traveler with integrity, how you get to show up for the companies to work as a team. So that's my latest guide that I like a lot. So I'm going to give that to all of you guys. So that should be up now. So yeah, there's all our free goodies. And now we can go through and start looking for. So if you asked a question, make sure the red circle next to the question is lit up. So I'm going to scroll and look for these red circles to find them. And if you didn't do that, I'll scroll right on past you. And it looks like, actually, I can only scroll so far. So
yeah, the ones from the first part, it looks like they got truncated because there were so many yeses out there.
Okay, so please re-ask your questions. It looks like we can't scroll down, but we're here to answer them. So whatever questions you feel like did not get answered now that we finished the education piece, re-ask them. All right.
You want me to just grab one?
Go ahead and answer one. Yeah, you got it.
One was asked by Audrey and Mark about if there are any pre-tax vehicles like health savings accounts that can be used to cover the expense deductions lost. Well, if it's employee expenses, no. But it does bring up a good point. One of the most effective ways to save on your taxes is to use whatever pre-tax benefits that you might have available, or like if you have your own health insurance, if you have a health savings account, contribute to that, and so you can use that money to reimburse yourself for your medical expenses, and that generates a pretty significant tax deduction. So that was Audrey's. Some of these are not directly related to tax reform. And Jacqueline has a question about whether you're supposed to perform part of your business in the area of your permanent tax home. I'll give the 3-sentence explanation of a tax home. Jacqueline may want to send a more specific question to us, but a tax home is first where you make the majority of your income on a regular annual basis. If you don't have that place, if there is no such place in your life, then it can default to where you maintain your residence dwelling that you have significant expenses for that are duplicated, because when you're on the road temporarily, you have to get a second place of lodging, and those expenses duplicate what you have at home. If you don't have one, don't have two, you're considered itinerant, and all of the per diems and any kind of reimbursements are taxable. Now, you don't necessarily have to work at home to make that work, which is a subject to Jacqueline's question. But Jacqueline, why don't you just send me or whoever a more detailed question. Jessica had one about lowballing. You already answered that.
Well, I think she was asking how, is there a number? I think a lot of people like to be like, is it 10? Is it $14 an hour? So I don't know how you answer that, but I think that's
Yeah,
interesting. How
there's no
low do you
one.
go?
Yeah, there's no one number, but it's pretty obvious that the
Mm-hmm.
lower you go, the more suspicious you look.
Mm-hmm.
Uh, and
And what
the
would you say is an average that we see right now in the industry for these new travelers that might have no idea what to even look for?
your typical RN, and you got to remember when we do tax returns for travelers, we require contracts, and I see these contracts come across our desk. So the average pay, a non-crisis shift, crisis shifts you're getting paid a lot more, usually. But the average is anywhere between 1823, 1824. That's typically what you'll see as a taxable wage. Uh, Rachel or Rochelle had one about what timeline constitutes residence. Because a tax residence and a permanent residence are two separate things. So I don't know how you pronounce it, Rochelle or Rachel. You may want to clarify that in an email to us. I'm just going up the ladder, Laura. If you find one before
Yeah,
me,
I'm seeing all the thank yous. Thank you guys for the thank yous. It's so nice.
your connection is poor for
Yeah.
Diane. Yes, this is
Yep.
going to be available afterwards, right? You may
It
need
will
to
be.
touch on that.
You'll all get a replay afterwards to your email addresses if there's parts that you want to see again. And if it's poor on your end, refresh your browser because it could be your Wi-Fi. So check that first. Brandon, I want to transport back with you 8 months ago to go into Bitcoin. So if you can figure out how to do that, I'm coming with you. Okay, yeah, I see a lot of. Let's see. Are there any more questions? Go ahead and put your questions up there, guys, especially on the new tax reform. Put the red circle next to it, and we're here to answer them.
Jacqueline had another one. If you're duplicating expenses by paying rent at your tax home, is it acceptable to pay rent to your landlord via direct deposit? Well, that still generates a paper trail because your bank statement's going to show that that was transacted. So that's fine. You just don't want it to be cash to somebody because for those of you in okay, I spent 25 years as a respiratory therapist. If it's not documented, it never happened. So if you don't have some sort of paper trail proof, nobody's going to be able to say it actually happened. Kimberly says, we live in Dallas, don't have a state tax. I work in Hawaii 6 to 9 months each year. I pay the state tax, but I get a refund each year. Is this going to go away? No, this does not affect that. Cheryl Clay, I have a tax home. Do I still need to keep the rental agreements? We covered that. Brian said if you already do our taxes, in other words, Brian must be a client. Will you go over how these laws affect our future taxes when we talk? Oh, absolutely. Doing a tax return is a historical act. You just record what's already happened. The real work comes in trying to help you save in the future and modify anything that you can to save in taxes. Of course, that is non-negotiable in our world. Claire
I think
Dumas,
we missed one from Claire. Yeah. Mm-hmm.
please clarify how long you can work in a state without affecting your tax home. We need to rephrase the question. How long can you stay in one area? It's not the state. It's the same area. You can't stay in the same area more than 12 months for you to go back. There must be a significant break in service, and 30 days won't cut it. And if you go back for a second 12 months, then 3 months isn't going to cut it, even though that's what the agencies will allow. So it's an area, not the state. Let's see, going up. Katrina, is there a maximum amount of money an agency can pay for mileage? Yes, the standard mileage rate.
Which is what is that right now?
Right. It's 53 and a half. I haven't committed it to memory yet. Yeah. So traveling to TravCon is not deductible. Nope, not anymore. Unless you can get the agency to reimburse you.
That sounds like a good reimbursement, agencies.
Yes. Let's see. Julia says, how will it help to do a 1099 if we have to pay full price for health insurance? Well, that's part of the trade-off, but this is also why if you're going to work it as an independent contractor, you want to make about 20 to 25% more than you would as an employee to cover that. Now, the health insurance would be deductible, but it's not as effective as getting it through your employer. Then Sonia, can I still do a standard deduction married filing joint? Yes. And she adds with one income? Absolutely. It's the best situation to be. You have a spouse that doesn't add income and take away from that deduction. That's by math, obviously. Gina, I'm working a local agency right now, like per diem shifts, not contract labor, but no tax-free money. Will this be the same for the deductions? I'm also a fitness instructor and write them off. On both ends, employment business expenses, they're gone, but if you're a fitness instructor as a 1099 contractor, you have the same deduction still available to you. Patricia Pitts, what's the benefit of travelers for pass-through rate, beneficial LLC or Inc.? It's all going to apply to the same. You either got a lower corporate rate or a lower pass-through rate. Can you still rent from a family member? Asked Amanda. Yeah, that's not changing. What would you suggest to a recruiter advise to suggest for travelers key points? Well, anything in this webinar. Kimber Whitney, I pay rent to my parents.
I want to touch on that though. So sure. Recruiters, what I would suggest is the same thing as always. Just keep it transparent and honest. Not use this as a way to do tricky marketing. The industry is better when we're all on the same page. So it's just about honesty. Like if someone is asking for more money for something, but you don't have more money for it, explain it has to be moved around. But I think the best recruiters out there are the ones that are just sharing things transparently, keeping this industry well educated. Mm-hmm. So I think that's it. Just don't be one of those companies that is now thinking, oh, this is a new way to market free things that are really just moving the coffee around. Honesty, that's it.
Changing the cups. Kimber says, I pay rent to my parents for a tax home. Do they need to claim it on the taxes? If you call it rent, it's best. TR Deborah, thinking of buying a camper, does it have to be a motor to be a deductible? Well, it's 2018. You can't deduct it as an employee business expense, and you never could to begin with, because most RVs are used as residences. But there was an article in a financial magazine that was very misleading, got circulated on Facebook, about the type of campers that you were allowed to use as a deduction, but that was specifically a business deduction. Campers, RVs are still second residences. The deduction for second residence mortgage interest has not changed. I will say something we didn't cover. Home equity interest is no longer allowed. So you may want to consolidate your home equity into a first mortgage. How long can you live, work elsewhere before you are considered a resident? Rachel asked. Again, tax residence and permanent residence are two separate things. If we're talking about tax homes, you can't work in the same area more than 12 months, or your tax residence will shift. Let's see, that's a repeat of the same question we answered. As a sponsor of education and CE offering for nurses, what can I do for the nurses needing mandatory CE requirements? So the more you can market that to the agencies as a reimbursable benefit, that might be something to consider. Are GSA rates going to change since deductions are dropping? No, because all GSA rates really are is the maximum the employer can give without receipts. The IRS just adopted the meal allowance as a way to reduce your record keeping for the meal deductions. So that's not going to change. Let's see. If I work an area 9 months, Jordan asked, take off 30 days, does that reset the clock for the area? Well, you're not to the 12-month yet. But let's just use the most extreme. You're there in a place for 12 months and you want to come back for 12 months. You need to be gone 7 to 12 months before you can come back. Remember, a tax home is your main place of income. You keep coming back to the same area too much, you made it a main place of income. Will you be doing your envelope? I guess our receipt envelopes, Tracy asked. For preservation purposes, absolutely. My wife is on that right now. We are still giving out the receipt envelopes as they used to be. They're great for independent contracting, but we're putting an insert in there for right now with a list of the items that you need to keep for 2018 and beyond. RV deductions, Christy writes, just the interest and property taxes. Quick review, paper trail for a check being paid to family member, staying out of state. It's a paper trail. It's a check. It's recognized by the bank. That's good. Just don't give cash.
And I think you can also write up a lease with your family members as well. Could be part of the paper trail, right?
If you third-party notarization, yeah, then it's more realistic. Because if it's just you and them, imagine if you and I signed an agreement nobody was watching. How are we gonna know? You know, we just this piece of paper. Did we really agree to this? It's got to hold weight, but family members, that's related parties. Chad has a question for you, Laura. Can I use your website to verify if my recruiter is legit?
So what you can do, Chad, kind of. So it's not like I just interview any recruiters. They have to go through. They have to want to be a part of it, have time to get new travelers to them, all these things. But what you can do, Chad, is you can write me. I have other guides, and some of them have the red flags in there. They have a lot of questions in there that are similar to questions I ask on my interviews for the recruiters that try to get into Nomadicare. And so you can use that to self-assess, to be like, okay, well, is my recruiter doing this? Have they done any of the red flags? And give you some new questions to maybe present to them to see, well, how do they do overtime rate? How do they do extensions? Do they understand tax homes? So you can use those guides to test your own companies, your own recruiters that you like, and see how are they measuring up for those things. So I'm happy to give those to anybody that wants those. Absolutely.
Amanda writes some question, and I'm trying to avoid self-promotion here. Where do most travelers get taxes done seems to be more complicated in the world of travel nursing.
Oh, I'll do that. Okay, so most people go to this place called traveltax.com. There's this really great guy, he's Joseph Smith. He knows the industry better than anyone. Well, honestly, I think that's where a lot of people go.
Right. Realistically, though, you want somebody who understands nowadays multi-state issues, because just like I said, the states are monitoring your license as your cookie trail. And you can still itemize, however, the complicated employee business expenses are out. And anybody who's dealt with truckers usually has an easier time of understanding travelers. April, and let me say this, if they can defend a return for free, that tells you something. Then that's something we've always done with our clients. If there's a letter or whatever, we'll take care of it. We don't charge extra for that, unless it's their fault for it happening, misrepresenting themselves. My husband travels with me, does consulting work on the side, has a home office and business. Can we deduct the RV since he'll be working from it? No. There's actually a couple of court cases, and if you go to my blog, you'll find one of them on there. If you're going to deduct a home office, it has to be exclusive use. You can't have all your personal effects there. Is it okay to buy a car in the travel state, then later re-register it to your home state? Yeah, you can do that. Sometimes that's an evil necessity because you got to get in a car and you're away and you can't go back in time. But make sure you do that. How much time you need to spend in your tax home area each year? At least 30 days. Will you create a way for people to be notified when your new envelopes are available? It'll be right there on the website and newsletter and blog and Facebook and LinkedIn and Twitter.
Nice. I didn't know you were on all that.
I need to hire Laura to manage all this stuff for me.
That sounds like more than I do. That's Twitter? Never touched that.
Yeah, it's a little bird that I can't compete with Trump. I'm sorry. Jason Greenwood, do you think the reduction in tax deductions for home will have an impact on the housing market? Cause the cost of rentals to increase. Really, are we going to become more of a renter's paradise? That's hard to say. Canada does not give you mortgage interest deductions except on the provincial level in Ontario, and it's a property tax deduction. And their home ownership percentage is pretty robust. Ultimately, home ownership saves money. So the tax deduction is just icing on the cake. What about local contracts and home? Does 12 months apply? No, you can work at home all you want to, Patricia writes. And Tracy has a question for you, Laura. Is your win-win the same you had in Vegas?
No. So I had this guide in Vegas. I don't think I have one out here. That I was giving away to people at Travelers Conference. That was my Empowered Traveler Guide. So that one has questions to ask your company, recruiters, red flags. This one is a brand new guide, Tracy, that I made since Vegas. So if you download this one, it'll be something brand new for you.
I got a little confused. I thought you said the guy in Vegas, not the guide in Vegas. I'm like, oh boy, pull out the popcorn for this one.
What is Laura talking about now? Talking about boys in Vegas. Yeah, after webinars get to about an hour and a half, I just start talking about boys. So.
Oh yeah. I think that's all I got read.
It looks like there's one more for you, maybe. Did you read that one?
What's the difference between the state and the area when it comes to taxes?
Oh, she's talking about it's from us,
yeah. Yeah, I mean, I'm sitting here in Dallas right now. So what's the Dallas commutable area? Yes, it's in Texas, but Texas is a big area compared to Dallas. So when we're talking about working in the same area, we're talking about a commutable area. My way of measuring two different places is if you got two locations, number one and number two, and you can live in the middle and have a regular commute to both, that's the same area, because then you're just orbiting at that point. Let's see, Brandon, if I have legitimate lease, not family member, but do not have checks to back it up, my payments at home, I'm paying in cash, is this problematic? Well, the lease helps, but it doesn't necessarily prove that you paid it. So I would start doing checks, PayPal, or something that somebody else recognizes the transaction. So I like, Tracy says San Antonio and Lubbock.
Lubbock. That's where I went to college.
You're from Texas, you know.
Yeah, it's Lubbock, Texas.
5 hours apart. No, that's not the same area.
Think about it like commutable, Tracy, or anybody. And you'd have to be able to commute from one area to the next.
Yeah. Helen says, can I do one assignment in my tax home area to fulfill the 30-day requirement? You can, but obviously you're at home, so it has to be fully taxed. You can't be getting any kind of tax-free money out of that. Amanda says, what's the best way to go about making a lease agreement with parent relatives? It doesn't have to be anything fancy. And it's like we said before, a lease agreement between related parties needs to have a transaction to back it up. But the lease agreement itself, go to your bank and get it notarized. I mean, that's free service if you have a regular bank. It doesn't hurt to do that.
Hey, can I add to or ask you a follow-up question for Helen that I think people will be interested in? Because I think so Helen's question was, can she do a travel assignment in her tax home to fulfill the 30-day requirement? If she does an assignment, it's fully taxed in her tax home. Does she have to keep paying rent then to get the tax-free reimbursements when she travels away? Like, does she have to maintain an actual home?
I wouldn't change it, because then it looks like that rent is strictly for your convenience and not because you're actually keeping a home.
Well, like, I guess this is what I was saying. So if someone is working some assignments back in a tax home, so they're making most of their income there, then they're able to travel away without worrying about those other rules. Do you see what I'm asking?
Yeah. Well, you can shift over. And like we mentioned before, a tax home is first, where you make the majority of your income on a regular annual basis. And majority is sort of a vague word there. It's really significant every year. It's a consistent pattern. So you can have a tax home without keeping a dwelling if you're showing significant income in the same area every year. So if she comes home, begins working at home fully taxed, she's also got to do that the next year and the next year and the next year to make that work. You can't just turn it on one year and turn it off on the other.
Yeah.
You need to be consistent.
Cool. Yeah, I think that's good. I think that's the one thing we talk about less when we talk about tax homes. I think that's great. Even though I know this webinar is not about tax home, I just jumped on that. All right.
Johanna. It's not Johanna. It's John. Johnna. Johnna.
Okay.
What are the cons of being a contractor as a nurse? Does it make sense to start asking recruiters for 1099s? Let me answer the second first. That's not really something you can ask for. Because there's so much worker classification issues involved in that, a lot of agencies aren't even going to touch it. Now, you can find an agency that will do it, or you can be really aggressive, get an LLC, because they don't want to pay you, they want to pay a company. You don't get it for tax purposes, you get it for having an entity out there that you work through, and then contract yourself out. There's a lot more pieces to this puzzle than just one or two things. So then the first question, the cons: paperwork. You're paying double the Social Security and Medicare taxes, and benefits. You have to do your own benefits. Rachel asks, currently as a traveler, you're able to claim travel expenses, past your reimbursements on top of the standard, even though they don't exceed the standard. No, you can't. In the past, 2017 and earlier, all of your deductions, including your business expenses, when I say all, I mean medical, state and local taxes, mortgage interest, charity, casualty losses, they had to all exceed that threshold for you to use that total number. So standard is just a default. If you don't have enough, you take the standard. It's really not something you pick and choose like that. Do we need to continue to keep our receipts? We touched on that already. Is it better now to be itinerant? No. Tax-free dollar is worth $1.40 after tax.
So Tracy, we're still getting all of that tax-free reimbursements if we have a true tax home. So no, there's still amazing, great benefits to being a traveler and getting those benefits.
Right, absolutely. Jessica asked, should companies, agencies start 1099s for travel nurses? Again, it's that same answer before. That's something they have to completely commit themselves to, and it's not as easy as it sounds. Mm-hmm. Shelley Harris says, anything change for dependents? And of course, we were talking about how this affects travelers. Yes, because the personal exemption is gone. Now the child credit is gone to $2,000, which is really the same as the original credit plus the personal exemption was. So not a lot has changed. The bigger issue is, though, large families. Once they get past 16, you can't take the child credit you can take this smaller new credit of $500, but it's not the same as a personal exemption. So it's changed in that respect, but it's the larger families that will stand to they won't benefit as much with kids that are older, that are still at home and are dependents. Oh my, you're doing paying relatives. Do you need to pay a portion of utilities, cable? Amanda writes, no, the first and most important thing is you're keeping a dwelling. Utilities are part of that, but we all know places where you pay rent and you don't pay utilities. The apartment complex absorbs that. Mm-hmm. So I'd rather see somebody pay for a dwelling, not pay for a utility bill. Should companies, agencies start making we already answered that. Does paying private health insurance in your home state count as a permanent residence? No. That doesn't. That might support the fact that you have a permanent residence, but it doesn't make a permanent residence.
Yeah.
Traveler life has become more complicated. Says
you said it. Yay!
Well, that's what we're
no more red dots. We did it. You know what, guys? First of all, thank you for staying for the whole time. We still have almost 200 of you on live, so cool. Thank you. And Joseph actually spent his day today doing a training for 6 hours of training today already.
At an agency, and I get another one tomorrow.
Traveling, traveled, did an agency training all day today, stayed up late to do this training with us tonight, and then back tomorrow training. So grateful for your knowledge, grateful for your time, giving this knowledge to us for free. And, you know, you're such a trusted place that we can come to. So we appreciate it. And thank you all for coming live, because how much fun was that to see all your yeses and and
my coffee cup
and my new coffee cup. I'm a little bit too excited about the coffee cup. I love getting swag. So anyway, we loved having you guys live, and thank you Joseph for this.
Okay.
So all right, thanks for that last yes.
There was one other question thrown out here where we're going to have more detail about LLCs. Yeah, mm-hmm. There's already some of that on our website, but we're going to be expanding TravelTaxIC.com. It'll be part of the whole, but it's going to be an expansion of those rules because we expect to see a lot more of that in the future.
Yeah, that makes sense.
We're done. It's an hour and a half. We gotta go to bed here.
I know. I'm over on the East Coast. What am I at 10:30? Yeah, this is when I either start talking about boys or I jump off. So we're gonna jump off.
I'm getting off. I'm gonna get away.
All right, guys. Well, thanks so much, and we'll hop off now, and we'll see you next time. And I see people saying they want more webinars.
There you go.
Another night, another time. All right. Good night, everybody.
Good night.
Bye.